loaded. I've got it here. If you are checking my profile a lot, you will have seen I've updated several posts. This pound one's quite good. I'm going to run over FX and gold, etc. Now, as I say, the markets aren't particularly fast today, hence the low percent amount changes. You do have a bit on your pound and euro, but again, nothing massively jumps out. But that will all change. You know, it's not going to last forever. Eventually things swap and they change. They get better, they get worse, etc. So you just have to be ready for it. Okay. Now, I'll kick things off on the S&P 500 index. As always, if you do want to get started with myself and actually learn to trade the correct way, you can do that for free by clicking under here where this link is. Click that. It's absolutely free. You can get on board and join the Discord. Come and chat with us as well. So under this video will be that link wherever it's posted. So for the SPX, I'll show you what I'm looking at and why, where my orders are. If you zoom out slightly, what you can see on the SPX, okay, the S&P E-mini futures, is you've slowly and quite flatly been rising in value, okay? So a minor uptrend since October 22. It's now obviously halfway through May. So we've gone a fair way, 6 months or so. And really what this represents to you is not an immediate recovery in the US market, okay, the stock market. It's just a very flat one. Now, because it's flat, I don't expect it to burst higher. And also my bias is going to come because if I look to the left here, I can see all sorts of price action. And that gives me significance when I'm looking to trade the short side on a rise. Okay, so where I'm aiming for that is two places. At first, it's going to be 42.25, and then secondly, it's going to be at 4280. And I'm going to take two trades at these points. One is going to be what I would call a front runner. So that's part of my trade split up and put in the lower part because of the lower probability. And then I'm going to put the remainder in on the second line, which is going to be 4280. So really what I'm looking for is price to push up there, okay, and then into here. Now, I'm not saying that I'm buying this. I'm not going to buy it because I'm too late, okay? If I wanted to buy it, it should have been there, just like you could have bought there and there and there. You know, it all coincides, and you've got the same thing on the flip side. Is essentially what I'm getting you to understand, guys, is that this, what I've just shown you, these bubbles I've drawn, you get the same thing again, okay? You've got it here, you've got it there, okay? And here more significantly, and of course there. So that is why I'm looking short at that point, because I'm looking back to 2021 where you've got significant price action, okay? Now, if you look again to the left, you can see the rally came from COVID all the way up, you know, 4,800 from 2,200. It doubled, it over doubled, okay? That's a very long way. And I wouldn't be surprised if you're not smashing through this first time because of that extended up move. There's probably going to be another down move in there. So that's why I'm short. And if there isn't a down move, I'm DCAing in. Okay, if I don't get it 4280, that doesn't matter. You know, I'm not massively concerned with it. You know, I'll look higher, okay, as price rises. And my plan remains the same regardless of my asset I'm trading. I'm just looking to accumulate those good prices and use DCA, because DCA is the most effective way to accumulate good prices in the market. Okay, so that's why I use it. DCA. DCA is the best way to handle anything, pretty much. And it's because I don't know the exact point it's going to reflect on. I can only make a decision based on what's happened. I don't know if it's going to be that point that it bumps into and falls away from. I don't know if it's going to be this point, okay, or this point, but I don't need to know that. I don't specifically need to know the exact centimeter it's going to bounce off from, because I'm creating an average of price. And the higher price gets, the better I want it. Now, as well as this, if you look, just on another note, if you look at your uptrending market, okay, on the S&P E-mini futures market, okay, you really need to be parallel on these. That's why I use parallel channels. You know, you're not particularly, you know, you've got room to the upside, Okay, so it's slightly inaccurately drawn, I know, but I'm basically looking to rise higher. Okay, so you're not that far off these key MAs, but once you do get to this point, you know, I'm looking to trade it like this pretty much. So we come up to the top end of the uptrending channel, you hit a new price action level, and you come down. And by this point, you know, your key MAs might shift along. Okay. Remember, the further away from moving averages you get, okay, the more valid your trade is for a short. Now you can already see your stochastic oscillators up here, and that is why you shouldn't be buying. This candle's looking strong, protruding to the upside. I still don't want to buy. I'm not a buyer here. I'm letting the market do its thing. I'm letting the market move. Any questions, guys, please do put them in the chat box. Anything about anything, just ask. So yeah, I'm looking for a rise higher S&P. I've got orders short at that point, so I'll be getting in about mid-level risk, okay, on my short trades. So you've got your parallel channel, you're pushing up with bullish candles, and you've got previous price action to the left. That's my bias on the S&P. For Bitcoin, what you've got at the moment, I've started on the weekly. So Bitcoin, you know, similarly to pointing out those previous price action levels on the S&P, you know, you've got something similar here. You've hit this candle wick there, all right? And that's why you've got your first bounce. Now, what you'll notice is if you put the time frame down, you have a very minor fall. You've only come from here to there, okay? It's not far at all. It really isn't. It's, you know, you can measure it like this, okay? $1,000, $1,000 minus 3.5%. It's not a lot, in other words. So if you're going to exit longs, you should be out of them already, really. But the reason why I tell you what I just said is because I'm basically making the assumption, and I wouldn't be surprised if your next lump of PA is here, okay, and you've also got a bit there. So if we get to that point, 32,500, I wouldn't be surprised, at which point you'll bump into this key MA, your 100 MA on the weekly. If I drop to the daily again, you can see that candle's flying straight away, and it's no coincidence. Whether it's a long-term price action level or short-term, okay, you've got the same thing here. Look how bumpy that is. It's hard for price to break through that first time. Okay, it's really difficult. And of course, you haven't got that. So that's why I'm not looking overly short. That's why I think there's more left in it, because the fall is so light. You touch onto that 20 MA straight away and you rebound. Okay, if it was a stronger fall, it would have fallen away faster. Tons of people coming in, guys. If you can press the boost, I'd be so very grateful. And if you're absolutely new to myself and you want to get trading right, you know, I've been in the markets for 10 years. Go and click this link here. Okay. As I say, it's free. You'll get emailed updates, and I'll send you things you need to know. What do I think about gold? Do you think we get new time high, all-time high, presumably, with the current move? So thank you so much, White Wolf 1900, for that question, because it really helps me out in explaining things to people. So let's start off on the weekly. So the question was specifically, do I think that we're going to get up here? Okay, do I think we're going to make an all-time high? That would be beating this level we got August 2020, right? That's when you'd be beating it from. Now, because if I swap to the daily, the fall here, again, it's really early price action, so it rebounds straight away. And just like your Bitcoin, you're only touching on it, that orange line you can see, the 20 moving average. Now, if you touch on a 20 MA and bounce away, it's likely the sentiment for that asset is still protruding to the upside. In other words, the market news behind the scenes is too strong and there's no weakness on gold, okay? Now, the problem with that is there will be weakness on gold, okay? Now, specifically, the question was in regards to whether I think you're more or less going to beat up here, okay, and go higher. Now, the thing is, right, I'll just get rid of this pen. The thing is this. I don't know if we'll get an all-time high, but it's not my goal to know. I don't need to know because, like I said earlier, I'm using DCA. Now, what I mean by this is if you look here, the price has fallen. if you look there, the price has fallen. So my bias as a trader is to short again because I've already seen it happen twice. Okay. Now, because I've already seen it happen twice, you might say, okay, well, the next time it might go through. And you're absolutely right. So what I do is I drop my risk on the third try because the probability of it happening will then be proportional to how much I'm putting on the table. Now, personally, I don't really think you'll get massively higher than the previous high. Okay. I'm not ruling it out because it would be naive to do so. But all I'll say specifically is anything higher, and I'm just going to use my natural trader bias, and I'm going to trade naturally, and I'm just going to look to sell. I don't know if that's going to be 20,080 or 2,080 or 2,180, but it doesn't matter because I'll scale in with proportionate risk. And I'll hedge if I need to. If I start to find I've got it wrong, I'll hedge. I'll take care of my drawdown. And I know mathematically at the end of the day, no matter how high we go, I won't bust out. I won't be margin called because I've got risk plans. So my answer directly to that question is this. I don't know if we'll get a new all-time high, but the only thing I need to take relevance from is the fact that we're so far away from these moving averages. And therefore, I want to short. And I'll scale in and short with DCA. Okay, you can see up here, look how far off this MA you are. Okay, and over here, you're far off the MA, and the price comes back every time. And you're very far off your moving averages now. Okay, your stochastic oscillator is way up. I don't want to buy it. I'm not interested in that. All I want to do is any moves to the upside that are impulsive. Okay, anything like that, and I'm going to get short. I like that short. And if you go higher than that, okay, that's absolutely fine because I'll short again. And I know if I get in trouble, I can use risk management tools that I've got within my academy. Like I said, if you click the link under there, and it will keep me safe no matter how high that price goes because I'm in track with my equity and my risk and my hedging plans if things go wrong. I can start to hedge to mitigate that loss, close out any losers, and work my way out the trade. Okay, and that's something people don't really do anywhere, pretty much. Moving on to a yen pair. I've done lots of posts about yen pairs lately. Guys in my Discord, if you're not in the Discord underneath, I post all sorts. White Wolf 1900, no problem. Thank you for asking. And of course, as always, if you do have a further question, please do ask again. For the dollar yen, across yen pairs, I'm looking for moves up before I short. You've had a slap bang move, you come up, you pull down, and you're not high enough really at this point. There's no negative market sentiment really yet. So 1375 for your dollar yen is fine for me. Pound yen, I like it short at the moment just because you've got previous PA. You can see you've got a bit of rejection there. Okay, I wouldn't be surprised if you can pull down there. Odd yen, same thing. New Zealand dollar yen. Okay, all of it's short at the moment. All those yen pairs, I like them short. Somebody asked me about oil. Okay, oil's a good one actually because we looked long here, a massive technical long zone. Okay, it was fantastic. So if you took that long, great. I screamed to the heavens about it. I kept going on and on and on. So well done if you took it. Now, for oil going in the future, what I'm really interested in is this. Okay, that is your only real key price action. You also need to take note that this is a downtrend. You start from the top. So within that downtrend, we're looking for a move higher so we can re-short because we're looking to trade in the natural wave of the market, just like you would have here. So you can see you would have bought in all these spots, and that's because you're trading in trend, right? Price goes up and then it buys when you're down. You buy it when it's down. You buy it when it's down. And that's what makes an oscillation, okay? Now you've got the same thing here, and if you want to view that more neater, just put the time frames up. Loads of people ask me about how to view the market so simply and clearly, and a lot of the time, obviously, with my multi-time frame analysis rules in my academy, it works well. But what you can do as well is literally just put the time frames up because it makes everything so much clearer. Okay, you've got a few candle wicks to go off there. You could lightly short, I would say at 90.5, okay, lightly, but more so I'm interested slightly higher up, 93, okay, round there. And if you're really risk averse, you're a new trader or you're an investor, you're a short investor if you like, you could wait to 98. But whether you'll get there soonish is another question. But our goal here is simple, okay? The market is pulling down and it's creating this lovely new downtrend. Your goal is to short within downtrends, and therefore the price is too low at the moment for you to be selling it. I don't want to sell it because if you take two lines, one up there and one down there, you can see you really want to short anything round here, okay? You don't want to short anything round there because the price is not high. It's come off from 64 to 82. There's a long way to go in terms of retracement. There's absolutely loads of people in here, which is really surprising because the markets are slow, but I know I do have a lot of loyal and dedicated followers, which I'm absolutely grateful for. Thank you for coming again, guys. If you can boost this, that would be absolutely amazing. And get involved in every way you can. I've just made a Facebook group as well to help guys just post these. I should have posted the link to the stream in there, so I've forgotten to do that, but I will do it. It's absolutely awesome to have so many people in. If you are new, click the link under the stream and you'll be able to get set up with myself. So anyone who's looking at the pound New Zealand, I've been trading it for a while, but it's so choppy. If you're thinking about trading it, I'd probably hold off. If you're already in it and you're short, I'd look for early exits at 1985. Longs, you've got tons of PA over here and here. So longs I do actually like at 1961, but you need to get there first. And of course, again, it's coinciding with those key moving averages there. Okay. Like I said, the further you get away from these, the harsher the fall will be when it comes back. You've seen that there. Okay, you see that there. And on the flip side, when you come under them, it's the same thing. You see that there. You see it there. Okay, and there. Now, just take note of your stochastic oscillator again. Do you want to buy? Would you really want to buy? And I'll get the FTSE up as well. I say it a lot, but I trade this very much. This is going to get absolutely wasted, in my opinion. I'm heavily short on this. Okay, I'm short a lot. Why am I short? Well, just think about it. Number one, look at this. Okay, what does it tell you? Okay, it's overbought, right? Okay, I know it's overbought, but it could still go higher. Fair point. No, you're absolutely right. But why don't we just count the candles and see how many have come up and whether you'd really want to buy that late? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles up. I know that's a red one, but you're still in the same up move. 15 candles up in a row. It's absolutely not the time to be buying. Okay, I like this short. This is an ideal zone. I think you'll get to 773. I'm going to hedge as well when I get lower. Okay, you can see there's nothing really in the way to get till you fall there, and I won't be surprised if we get to 773, no problem. But again, it's come up far. Again, someone could have asked me, do you think it's going to be an all-time high on the FTSE? And I'd say the same thing. Well, I don't know, but I don't care. All I'm going to do is short as we get higher, because my goal as a trader is to take high prices. Okay? It's to take high prices for shorts and take low prices for longs. And there's a specific way to do that. Ethereum, if you're wondering about it, I think you'll get above here. And it's the same thing as Bitcoin. I think you've got more to go. That is a very light fall, hardly any way down. I think you'll get nearer that 100 MA. I think your 100 MA will cross over and you'll get about 2,300. But again, I'm not buying because I'm too late. Okay, it's too late to buy. Pound dollar, much of what's going on in the market is the same. Okay, the dollar is not doing well against a lot of different assets, and there's a little bit left to run. Now, I think you'll get a news change soon, and it's priced in. Effectively, those moves, they'll come up, and then the news will pull the market down ultimately. But we've still got a little way to go for most assets. The same with the pound. Look, you can see the fall's really small. I wouldn't be surprised if you get 1266. And your MAs here just curl over, the higher ones, because you're coming back to them. Okay, the closer you get to them, the more reasonable price is. And I've drawn it on here already, the euro dollar, similar thing, you've got room. So the summary really for today is that you've got slight room. We're not interested in buying late, okay? We're really not interested in that at all. We're just interested in letting the asset, sorry, the asset, got a bit of a cough, been a bit ill lately, but I've recovered well. We're just letting the asset do its thing, come a little bit higher, and we can pre-plan our price action shorts, okay? For the euro, that's what, for me, that's 1.117, okay? And again, there's room for it. There's not enough sentiment for the dollar to be strong, and therefore you're going to keep crawling, okay? So I'll brush over random pairs. I mean, the DAX, someone's bound to ask me about the DAX. The DAX and the FTSE are hand in hand. I like the DAX short. Why do I like it short? Well, you're at a previous high. The price is factually high again, so I like it short. You know, and if you put it on your monthly, I mean, I counted the candles in a row, but if you put it on the monthly, I mean, from October to now, you've practically just gone up in one line. There is that small red candle, but the movement nonetheless is straight up. And that can't go on forever, guys. Just remember, that just cannot last forever. It has to stop. Okay, it has to end. You can't go up forever. And you've seen it time and time again. And I've traded all of these short moves for years. Okay, on my broker, on the FTSE. And the method is the same for any asset. After a big move up, you get a big fall. And conversely, after a big fall, you get a big move up. And all you have to do as a trader is understand, and that's what this link does under the video, show you where these areas are, where it's going to be good to buy or sell based on those rules of buying low and selling high, and where you get price rejection, because price rejection is often shown by candle wicks and in a very significant way. Again, another yen pair, I'm looking short. You're coming up to these key moving averages, your 20 and your 40. For me, that is a sell. And again, a really good picture here because it's showing you in line with a trend once again. Okay, the market is trending down. And I think you've got slight room for the 91.3. But you are hitting on early PA again with the candle wicks that, you know, like I was saying. So it's okay to lightly short, in my opinion. New Zealand yen, exactly the same thing. Okay, it's much of the same. You're just looking to short as you reach those low MAs. And more importantly, you hit these PA levels over here. They're quite significant and they repeat themselves as markets always do as you go on in time. They repeat again. So New Zealand yen short. Euro yen I've given my bias on lately. Slightly higher, I like it. We're looking at historical PA levels here. Okay, I've spent a lot of time on that, so I won't talk about it too much, but I wouldn't be surprised if you come up, okay, and there's a bit left in this, like other assets. The euro yen slightly different, but 151 area, I'm looking to the short side. So I brushed over various FX pairs, guys. If you can boost this, that'd be fantastic. And if there's no other questions, I'll end it there. Can't see any at the moment. But yeah, I mean, overall market bias at the moment is, and I'll put it on the DXY for this, the DXY dollar index. I think you've got a slight way to run, slightly lower. I don't think it's done yet. The dollar weakness, and it doesn't mean we're going to trade late. We're not looking to short the DXY or long the euro dollar. We're looking to plan our price action levels So when we do get those appropriate prices, and in this case dig into the area between the 20 and the 40 MA, we'll get a good price, and therefore we can start to scale in long and use DCA. Okay, DCA is the key. We're not interested in guessing how far something will go. We don't care. We're just looking at getting low prices and high prices and trading in and out accordingly. So thanks for watching this video, guys. Go underneath and get the link to get started with myself, and I'll see you in the next one. See you there.